Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. Artificial intelligence. It's what's at the forefront for driving the software sector in 2026. And for investors, the focus has shifted from who is making AI to who is monetizing the technology. Joining me to discuss what investors need to know about the sector this year is RBC Capital Markets Software Equity Research Managing Director, Rishi Jaluria. So let's jump right into a new report from RBC. They just released their software outlook for 2026, noting, quote, the definition of software is evolving, and we think this will be better understood. How does this impact investors and the market for software?
Yeah, absolutely. Look, I think the key debate that we've been hearing really and intensified over, I would call it the past 8, 9 months, is what are the implications of AI for software? And is software as a sector just dead because of AI, because barriers to entry are coming down, there's new entrants, the model providers are entering. And look, we take a step back and don't get me wrong, I am a mega bull on AI. I live here in San Francisco. I'm surrounded by this day in, day out. But I think we're dealing with a changing definition of software. And the definition of software has always historically changed. It used to be mainframe systems and it moved to client server where you would buy CD-ROMs and install software on your device. And it went to the SaaS and mobile paradigm that we've been in for honestly the past 10, 15 years, if not longer than that. And I think the future of AI is going to be agents and multi-agentic systems. And that's just all a changing definition of software. What that matters for investors, though, because I think that's the key debate at the end of the day, is who that is public today can benefit and who's going to get hurt from software. And there's always discussions of, is it going to be everyone or whatever be the case. And the vantage point that we take is, number one, we're not ready to make the call of go buy all of software. I think that AI is going to create winners and losers and probably create an even bigger separation between the winners and losers. And the way I'm defining or the areas that I think are going to benefit the most from AI are going to be the innovative companies that can really double down on new capabilities, new features, and on customer success. Those are going to be the ones who can monetize AI the best over time. And I actually think AI is going to be the worst for the fat, lazy incumbents. What are the companies that are not innovating enough around AI that maybe are bolting on one or two AI capabilities or a few agents on their existing SaaS platform and believe they can charge for it? Because as we recently outlined, in a separate report, we truly believe that there's three different classes of AI capabilities. There's table stakes AI capabilities, which we do not believe are monetizable over time. There's reactive AI, meaning things that are maybe a little bit simpler, that are more reactive and rely on user inputs. Those can be monetized, but not in a huge way. And then proactive AI is probably the most monetizable over time, but also the hardest to do. And really, the innovative companies we think are in the best position to go into bucket three.
All right, I want to get to some of those winners. I want to get to some of those innovators. But before we look forward, rewind with me. Since 2023, the software sector has been lagging a bit. Some would even go as far to say it's fallen out of favors with investors. So what's driving that action?
Yeah, look, I think there's been a lot of shifting narratives, right? And so, let's maybe rewind a little bit further than that. Heading into 2023, and it's hard to believe, but ChatGPT launched maybe just a shade over 3 years ago, so it's still very new. Software went through what I would call the quote software recession, where coming out of COVID, where you had this accelerated migration to the cloud, accelerated digital transformation, you had tailwinds for a number of vendors from remote work as a result of COVID. Then we had to go through this digestion period of, TAM was pulled forward. Companies were probably overhiring and overspending, especially in the technology sector on software. And we went through this period of, rationalization of software spending, rationalization of headcount. And that was the backdrop of software heading into 2023. And so then, you had to deal with these shifting narratives, where for a while, the narrative on software and AI is, hey, all these software companies have so much data and distribution and incumbency and a captive customer base, so they're going to be the ones to be able to monetize AI. And I think, that's where you had initial excitement for some of these names. But then I think investors realized it's going to take a long time to monetize this. And now the script has flipped almost 180, where the narrative now is Well, barriers to entry in software are coming down. And so this is going to be bad for any incumbent, especially those at the application layer. When I talk about application layer, right? Salesforce, Workday, HubSpot, ServiceNow, those types of names rather than the infrastructure software vendors. That's where I think the narrative is shift. And that's why you've seen, exactly your point, software fall out of favor. It's underperformed the S&P 500. And by the way, the underperformance is probably even bigger than we think it is. Because if you compare the IGB, which is what we use as kind of the gold standard for the software index, it's kind of been carried by three stocks, which is Microsoft, Oracle, and Palantir. And I think if you strip those three out, the underperformance is probably even wider. Then, that'll get into the question, which was the key one we laid out in our 2026 outlook. What gets software to work, or what gets individual companies to work? And the answer to that is accelerating growth. And when we pick our like top picks, and we can get into specific names, but it's really going to be the companies that not only have the innovation, the long-term ability to benefit from AI, but also have the building blocks to accelerate growth this year that can work in 2026. And there are a number of companies that I think have idiosyncratic factors that are not driven by meaningful AI monetization, instead driven by other factors, and that's kind of informing our top picks for 2026.
And Rishi, what do investors need to see to have this growth come back for the
Yeah, I
sector?
think there's two things. Number one, as we talked about, is accelerating growth. And then number two is we need to see real evidence of early AI traction and adoption. And look, my viewpoint has been companies need to take this crawl, walk, run approach to monetizing AI, or the way we frame it is innovation, utilization, monetization. And just like a baby needs to learn how to crawl before they can walk and walk before they can run, you can't rush to monetization. And so I think in 2026, it's still too early to get that needle moving AI monetization that I know investors want to see. But to the extent that companies can start to provide proof points of, in our customer base, 30% are using our next gen AI capabilities, or customers are now spending more time in our platform because of AI rather than less time, because that's the real worry that we're having. Any early indications that the AI native products and capabilities that companies are building out are driving real value in the customer base, we want to see that, because if you can drive value in customers, you can charge for it. If you can't drive value, you cannot charge for it over time.
All right, let's go more into AI. How will the technology act both as a tailwind and a headwind for the software sector in
Yeah,
2026?
look, as a headwind, I think those are pretty well understood. Number one, you have just lower barriers to entry. And look, this is provable. If we wanted to create a software company 30 years ago, probably would need $20 million of venture funding and a year and a half till you can get a product on the market. With the rise of the cloud era, and you have, Snowflake and Datadog and AWS, that probably came down to $500,000. You could probably get a product out to market in 6 months. Now with the rise of AI and vibe coding, that number is probably $500. And you could get a minimum viable product out to market pretty quickly without having any software development knowledge. So barriers to entry are coming down. And so that means it's going to be harder for larger platforms to charge, to raise pricing, to charge for add-ons and functionality, because now barriers to entry are coming down. So that's the headwind number one. Headwind number two is on headcount. And most of these, especially in application software land, most of these companies are charging based on seat-based models. And the problem with that is, if you can drive greater efficiency and productivity using AI, headcount growth will slow down. Now, I'm a believer that over the long term, over the next decade, AI is actually going to be additive to job growth, not dilutive. And I know there's obviously discussions around AI replacing jobs and all that kind of stuff. There's going to be near-term job disruption, but over the long term, just like every other technological shift, I think it's going to be additive to job growth. But if companies were relying on natural headcount growth in their customer base, and that headcount growth is more muted, or even in certain cases negative, it's going to create a headwind. Now, what are the tailwinds? The big tailwinds in my mind are those companies that can actually sell AI native capabilities that not only drive greater productivity and cost savings, but can actually result in competitive differentiation and result in better revenue outcomes. Those companies can charge a lot more for these AI native SKUs than they could their traditional SaaS platforms. And I think that's exciting to me, right? Is like these innovative companies, I'm giving a teaser on names I'll talk about, right? But like HubSpot, like MongoDB, like Intuit, like Microsoft, even though they're such a big company, these are companies that I believe can innovate enough, and the tailwinds will really outweigh any perceived headwinds in the business. And these are going to be stronger companies over time.
What about Gen AI? How is that going to drive the software sector innovations from the rise of agentic AI agents versus chatbots? Like, how is the tech shifting?
Yeah, look, it's interesting, and I made this very deliberate shift about a year ago in my terminology. I used to use the phrase Gen AI all the time to differentiate, what's legacy AI versus everything that's built on LLMs and ChatGPT and beyond. Everything's gotten really muddied with since then because you have generative AI, you have agentic AI, you have causal AI, predictive AI. To me, at this point, it's all AI, right? And so that's the phrasing I use. And so when I'm thinking about like broader AI, it includes all of that stuff that we're talking about, right? But it's next gen AI capabilities, not traditional machine learning, data science stuff from 20, 30 years ago. I'm talking about modern technology. And all of this, I think, can be an enabler to modern systems, right? Whether it's chatbots, whether it's autonomous agents built into your platform that can actually have a consistent feedback loop, whether it's predictive AI that can actually forecast things out in ways that we couldn't do before, whether it's causal AI that can actually identify correlations that human beings can't. Like all of this stuff falls under that AI umbrella. And I think it can be a really big tailwind for innovative AI or innovative software companies.
And if AI is doing more for software, like even writing code, how does that create a moat for
Yeah,
companies?
look, I think the way it creates a moat is innovation has to be that moat, technology has to be that moat, because exactly to your point, like having quote code is not enough. We're probably going to hit the point that you can use AI to reverse engineer any proprietary code. But if you are a company that can consistently innovate, consistently come out with new capabilities and features ahead of your competition, and use AI as a mechanism to accelerate that roadmap, you're going to be in better shape than ever before. Maybe we can even take this to discussion about what happens to software developers as a result of code, because coding has been probably the most visible, like ROI driven use case of AI. I would say this is going to make your rank and file software developer who gets told to do something and he or she just does it and codes that, it's going to make them less valuable. Your visionary software developers that can come up with new ideas and really innovative, push the envelope, become more valuable. And I'll draw two historical analogies. One historical analogy I always lean on is, believe it or not, when the ATM was first introduced, the number of bank tellers actually went up, not down, because it became more profitable to open more bank branches because you need 50 people running a bank branch. And similarly, that means as a company, I can run 50 different kind of side by side projects under agile methodology and hope that one or two of them work out, because you can just have one or two dedicated developers along with a lot of vibe coding and AI tools. Also, the other analogy I say is when Microsoft Excel was introduced into the market, it didn't replace accountants. In fact, accountants became more valuable as a result of Excel. It replaced bookkeepers. And so I think when we're having that discussion on AI and job disruption, I think whether you're a developer or even a research analyst like myself, I think we have to ask ourselves, are we bookkeepers or are we accountants?
All right, let's go more into the winners and losers for the software sector in 2026. Who are we really going to see come to the forefront when it comes to monetizing
Yeah.
AI?
Look, I think, I know I sound like a broken record here, but it's the innovative companies. I would say Microsoft is top of my list. They're already monetizing AI beyond just the OpenAI relationship, right? They're getting real traction with GitHub Copilot. It's still probably the biggest AI assisted coding tool out on the market. They're actually starting, based on my checks, to get some good signs of traction with Office Copilot. Even Security Copilot's getting some early stuff. Some of the like AI adjacent products like Fabric, Cosmos DB are doing really well in this kind of AI world. So Microsoft is kind of my big one of like who can monetize AI in the near term. But I think there's a lot of other names out there. I think MongoDB is a really interesting one. This is, obviously not a household name. They're a next-gen database company. They compete with Oracle, but they're built for this cloud native and now increasingly AI native world. And that's a reason you see a lot of these cutting edge AI companies using MongoDB as part of that foundational layer. Cursor is a customer of MongoDB. Relevance AI is a customer of MongoDB. In fact, yesterday at MongoDB's conference down the street here in San Francisco, they announced Anthropic as a customer, right? Which is, one of the most innovative companies out there. And so I think MongoDB is really well positioned with this AI world. HubSpot is a very controversial one. Again, maybe not a household name, but almost think about them as they're a very significant competitor to Salesforce. The difference between Salesforce is HubSpot focuses more at small and medium businesses and the mid market, whereas Salesforce focuses at the global 2000. But the key difference, and why I like HubSpot a lot here, is HubSpot is, they've been innovating a lot and they've built all of these modules: sales, service, marketing, commerce, operations, all on a single platform rather than via acquisition. And I think because of that innovation in their DNA and because of their co-founder, Dharmesh Shah, and CTO, they have, I would say, one of the more innovative AI roadmaps in all of front office application software. I think HubSpot can be really well positioned as a result of this, in spite of the fact that they're SMB. And then the last one I'll leave you with that I think is really interesting here is Intuit, right? I mean, there really, I think, is a huge opportunity over the long term for Intuit to use their domain expertise, use their investments in AI to build AI agents that can do your taxes and close your books for you, right? That is, I believe, 5 years away, but Intuit has a right to win in that space. And look, I don't think the market is fully appreciating the potential for any of these four stocks I just said.
All right, I want to go back to the RBC report on the software outlook for 2026. It mentions that enterprise spending mostly stabilized, even improved. Do you expect that to remain stable in 2026?
Actually, I expect it to accelerate in 2026. 2026 could be the year of accelerating enterprise AI adoption, driven by more mature use cases, more robust LLMs, and improving standards on protocols like MCP or 8A. And not to get too technical, but I think these are all really important factors. I also think enterprises are getting more comfort around AI, right? And understanding where it can drive ROI in their business, whether that's margin expansion, whether that's better revenue outcome. And I would also point to, we published right before Christmas our RBC 2026 CIO survey. And that was also very encouraging for spending intentions on not just IT as a whole. I mean, overwhelmingly positive spending intentions for IT, but 90% of respondents expect to increase their spending on AI in 2026. And that's against a very tough compare in 2025. 89% expect to increase their spending on software. So that's just, I think supporting the narrative that I was talking about, which is software and AI are going to be increasingly intertwined. And I think that is very bullish for the enterprise environment. I'm not expecting this big step function change in the macro, but I do think it's going to be a better environment for enterprise AI spending in 2026. And I'm very encouraged to see that.
And with more of this like intertwining, as you say, and more AI features being implemented, how is that going to impact costs?
Yeah, it's a very key debate. I would say the punchline of this is there is going to be some pressure on software companies in the near term because you have to bear the cost of inferencing, and that shows up on your gross margins. You have to invest. If you want to be innovative, you have to put money. You have to invest in engineering and even sales and marketing, go to market to get these AI native products out onto the market. Having said that, steady state, if we fast forward 5, 10 years, these companies are going to be able to build really high quality products that they can charge more for than they could these traditional SaaS solutions, just like SaaS companies could charge more for cloud solutions than they could on premise. And I think these are companies that overall, this is going to end up being very accretive to free cash flow dollars over time. And that's what ultimately matters, right? If companies can generate meaningfully more profits in spite of this investment phase, they're going to be a much stronger position.
And how will software platform consolidation continue to impact the sector in 2026?
Yeah, look, I think this consolidation is going to exacerbate the gap between the winners and losers, right? You're going to see a lot more M&A out there, and we've seen that happen. We've seen, not just companies getting bought by private equity, but we've seen companies go out and acquire AI companies, right? You've seen Workday do that, ServiceNow do that, Salesforce to a certain extent with Informatica. I think we're going to see that continue. I think we're going to see companies say, we're going to use our scale and create those sort of opportunities. So I do think that there's going to be more consolidation out there. And I also think companies themselves are going to look to consolidate vendors, that you don't necessarily need 30 different vendors in the same category. If I can do more with one vendor, I'm going to.
And IPOs and M&As, finally, last question, Rishi. Will these accelerate in
I think
2026?
the answer to both is yes. I think we already saw 2026 close out with a lot of M&A, both on the strategic and private equity side. I think there's a lot of dry powder to put to work. There's increased urgency to accelerate AI roadmaps, and there's more M&A on both the strategic and private equity side to come. And I think there are the IPO window, in spite of all these concerns on software, this is a very open IPO window. And I think we're going to see the IPO market accelerate this year as well.
All right, Rishi. Well, we'll be watching. This is Industry Insights. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.